Number 4 shifts gears a little bit, but I think this is important. What type of business do I want to build? Meaning, I believe there's only 2 business models that exist in our space. You're either building a lifestyle cash flow maximization business model, or you need to be building enterprise value and equity, right, in an entity. Now, when I first started as an advisor, there was, the constant talk about you're a business owner, you're self-employed, et cetera, et cetera, et cetera. It wasn't until a decade later that I started getting clear on this, right? Just hiring more people underneath me and growing my team didn't necessarily translate into more profit. And it didn't necessarily translate into more satisfaction. So I think the best thing advisors can do when they're thinking about their business is to potentially accept this framework that there are 2 models. And this isn't a perfect framework, but I think it's reasonably well enough structured that it makes sense for people to think about it this way. I either need to focus on cash flow maximization and more of a lifestyle practice, which means lean on staff where I can, high-end technology, right? Maximize cash flow. That's probably describing the majority of where advisors are now and where they should be. But it's getting clear on it, right? If I hire another person to serve another 50 clients, like how does that actually add value to me and what does that look like, right? Because it has a zero-sum element to it. Every staff person you hire, you either then have to hire people to manage the people you're hiring, as you know from having a growing team, or you end up devoting a certain percentage of your time from it. So I hear advisors all the time say things to me, Dave, and like this, like, I just don't have any more bandwidth to take on clients, or we don't have enough bandwidth to do X, Y, and Z, right? It's like, okay. So the first business model is lifestyle cash flow maximization. There's nothing wrong with this, right? This isn't a good or bad. But there is a distinct decision that an advisor or a firm leader then needs to make if they're going to build enterprise value, right? That might mean paying themselves a small salary for an extended period of time and trying to build scale, trying to build things that function outside of them. So business development would be a really great example, piggybacking on our last one, right? Firms that build predictable and successful client acquisition models or business development programs have a higher valuation if they are sold than wealth management firms or financial advising firms that don't. It's a significant multiple add, right? Well, that means that the owner of the firm or the financial advisor that wants to go that direction has to commit money to it, has to invest dollars into it, right? And I think this is something that might seem like a very obvious question at first, but it really is an important question for advisors to settle down and think about. There's a book called The E-Myth that was written by Michael Gerber years ago, where he talked about how somebody was good at being a drywaller, and they get really good at it, and then they go out and they start their own business, and the next thing you know, they're not doing any drywall anymore. They're managing 10 people doing drywall. And they wake up and they go, I really don't like this. I don't have any training for this. I don't want to do this, right? And I hear advisors that have made that transition unconsciously saying things like, man, I really wish I was still serving clients, or I wish I had more time to take on clients. So getting really clear on the business model, asking yourself, what type of business do I want to build, is question number 4 in my 5 most important questions.
When I think enterprise value, I think like so far different than me, like we could never do anything like that, nor should we. Are there smaller RIAs or advisor firms that are building enterprise value that are not the mega national brands that everybody knows their name?
Yeah, so this is a really, really important and great question to dive into, and I hope that it doesn't have to get cut in post-editing. So let's first define enterprise value a second. Enterprise value doesn't mean that you've created some proprietary software or that you have become this mega, kind of like national RIA in the tens of billions of dollars of management, okay? To get to that space, you have to build and institutionalize processes, systems, and potentially like intellectual property, right? But I believe that a local RIA or financial advisory practice can build enterprise value, right? To do that, you have to start thinking about, if I was not in my practice tomorrow, this is the question I would start with. if I was not in my practice tomorrow, would my practice continue to not just run, but would it thrive and grow? Because that's those two pieces on the back. Just maintaining something is okay, but just maintaining means you're slowly dying, right? Let's be clear about that. If I wasn't in my practice tomorrow, would it continue to thrive and grow? Now, building enterprise value means that you're building something that can run without you, and you're doing it with intention, which means you have to institutionalize or systematize, right? Things like client acquisition, marketing branding strategy, your client service models, right? How you invest in or use technology in your firm. The other operational stuff that none of us really enjoy, well, none of us that have our heads screwed on straight enjoy: compliance, admin, human resources, risk management, things like this, right? So if you're listening to this is a shameless plug for ClientWise again. I get no monetary value or kickbacks from them, but go check out clientwise.com. My business coach, Ray Sclafani, has been on a mission to help advisors of all size practices and firms think about the ability to institutionalize what they do and build enterprise value. Okay, so you, Dave, are building enterprise value, not necessarily just because you have staff, but if you're building towards this idea that you could step out of your practice for 1 week, then 1 month, then 3 months, then 6 months, right? What you're becoming is a business owner. There is, not just in our industry, but a lot of industries have this misconception that somebody who's self-employed is a business owner. The self-employed individual is the practitioner, the person who, if they don't show up for work and they're not driving the business either just stays stagnant or dies, but it's not thriving and growing. The business owner is somebody who owns something that's growing in value because of the systems, the people, the intellectual processes, things like this. So you don't have to be a technology, software as a service, or move in that direction to build enterprise value. You don't have to be a $10+ billion RIA. You could be a $200, $300, $400 million RIA, or even a financial practice in an independent channel, and have really good people and systems that continue to grow the business at a rate that you're comfortable with, and the reliance on you as the founder becomes less and less every day. That's enterprise value. You can sell that to almost anybody, right, for value, right?
Yeah.